Hello, traders. It is Wednesday, September 4th, and it's time for our live event. As always, we're going to be going through all of our previous picks so that you can see how they've performed. Harry, how are you doing? Did you enjoy your Labor Day weekend?
Yeah, it was relaxing. It was nice. You?
It was very good, but it's hard to believe that the summer's over.
It doesn't
So,
feel like it here. It's 107 degrees.
oh, wow. I thought it was always 70 degrees and sunny where you are.
Yeah, no. September's the hottest month in LA, and particularly up here in the valley.
Oh,
It's going to
wow.
be in the hundreds all week. I think it's going up to 110 on Friday, so that's going to be fun.
Yeah, well, we've got nice, cool 65, 70-degree weather coming in this week. So anyway, let's kind
Talk to
of
me
get
in
on with our
February.
let's get on with our picks. I've got six picks that I want to go through, and these span the course of the last 2 weeks. These have either been in my video that I've highlighted or the live event. I had a mix of longs and a mix of shorts, and the market really hasn't done anything. So you'll be able to see how effective relative strength and relative weakness are in terms of a trading strategy. So if I go back, Abbott was a pick that I highlighted 2 weeks ago, and you can see how that stock has been in a steady grind higher. You would have done just fine on ABT. RTX is a stock that I highlighted during last Wednesday's live event, which was right in here. Stock actually gave us some nice opportunities on the upside. Yesterday with the market, it pulled back. It's still holding that EMA 8. I love this horizontal breakout. RTX looks like a really decent long to me. And finally, on Sunday, I gave you Walmart as a long, and you can see here's the price action the last 2 days. Here's the tell. Let's put the 5-minute chart up. Relative strength, relative weakness. The market gets its head handed to it yesterday, third largest drop this year. What did Walmart do? It held up beautifully. That's relative strength. That's the edge. So if you had gotten long Walmart, you didn't have your ass handed to you. I'm going to click that off. That was an alert. So let's take a look at the short side very quickly here. MU was a stock that I highlighted 2 weeks ago on the short side. And let's go into that D1 chart. You can see that stock got pummeled. Really nice short pick. AA was the stock that I highlighted last week. That was a short in the live event. Very nice drop in AA. And then finally on Sunday, last Sunday, COIN was the short that I highlighted. Hello. That was a beautiful short. So I hope that some of you caught that short right up in here. So you'll also notice the buy and sell signals as I'm flipping through charts today. Harry, why don't you give us your picks and let's take a look and see how they fared.
Let's see. So last week I had two picks, one long, one short. Gilead was my long pick last week. When I suggested it, it was at around 78. It's gone up about $1.38 since then. So obviously you could have taken profit any time. I still like the stock. It started to consolidate a little. You can see the candles getting kind of small in there. Like I said last week, this isn't a huge mover. So if you were able to get $1.25 out of this thing in a week, that's probably a good, a good trade for that stock. I also took on the short side Team, and that one there did not pan out. It didn't not pan. I mean, when I suggested it, Team was at around 160, 163, 162.90, and so you had an opportunity to get out yesterday at break even there. And today it's probably down a little bit if you're still short. So that one there is kind of a wash. Got out break even yesterday on the stock, but that one is hovering around the 50 SMA. At this point, I would just set an alert now because it obviously showed such good relative strength. You have converging. You have actually. Here's the thing with that stock. You have the 50 SMA at 165.95. You have a downward ascending trend line starting from, you can start from July 5th on that, or you can even go all the way up to, where's that? There, you can go all the way up to April 11th. And that's going to come in somewhere around 168. And then you have the 100 SMA that comes in at 170. So you have now three pretty strong levels of resistance, two SMAs and one downward sloping trend line on this stock. I would not short it again, but it is worth watching. And if it breaks down below, and it is below its upward ascending trend line, and you can easily draw that as well off of the August 8th low. So right now, I think technically it's a short still, but because it's up today, even though the market's kind of down or flat, I wouldn't touch it until I started to see some real volume dropping the stock. I do think it's primed for a drop still, but I'd watch it.
So here's how I would approach that one. I would click GTC. I would click on this candle right here. And you can see that alert line comes into play right at the 100-day moving average. I would click GTC and I would click on the low right here. And there is my lower boundary for the stock. If triggered, I don't have to do anything. I can gauge what the stock is doing relative to the market, but these are a couple of price points that I think are significant. If it breaks this lower one, it's got a chance to sell off to AVWAP-E. If it breaks this other one, it's going to be trying to get through the 100-day moving average. I did want to point out on GILD that Harry had highlighted last week. There you can see the relative strength that this stock has. We had the market getting pounded yesterday. Look at this sell-off. This is QQQ. Let's put up SPY. You're going to see similar, just steady selling pressure. I believe we were down about 120 S&P points. What did Gilead do yesterday? Held its own. That is the tell that buyers are lined up. If they weren't, they would have sent this stock into oblivion. But if you had bought Gilead, you didn't have to panic out of the position on a down market day like yesterday because it held up really well and you didn't have your head handed to you. That's the edge. That's the edge we trade.
So interestingly, today, and I'm going to suggest why I think maybe another, I just did a SPY strangle that was successful. Why another one might be appropriate. And this is why. And Pete, you and I were talking about this right before we went live. You have QQQ, right? And so the 100 SMA in QQQ is 461.09. QQQ is at 461.40. Then you have SPY, the sort of, proxy for the market. And the 50 SMA on SPY is 549.05. It, yesterday it touched it. Today it tried to break through it. You can see a long going back. This SPY tends to, even when it breaks that, it tends to pop right back above. SPY hasn't remained consistently below that 50 SMA since maybe October, starting September 2023, a year ago. And it was only there for about 2 months. It's a pretty strong level of support. So you have these two pretty, coinciding two strong levels of support on the market, which is on QQQ and is on SPY. What tends to happen there is you either get this confirmation that, okay, support's going to hold. That gives investors and traders confidence. They go in, market continues to go up, and you get this sort of nice move upward and perhaps, kind of erasing some of those drops from yesterday. If it breaks, though, combined with what we saw yesterday, then you get this, what would be better thought of as panic selling. So at this point, that's your line. Right now, the market hasn't decided, but when it decides, and it will, and it tends to not hang around these lines for too long, when it does decide, you're going to get a pretty big move, in my opinion, one way or the other. So that, to me, that's a SPY strangle or straddle. And that's probably going to be my trade for the week, but we'll see.
And you have a big event coming up, which could prompt a move one way or the other, and that's the jobs report on Friday.
Yes,
So if
yes,
you're trying to time this somewhat, then you look for that event. What's that catalyst going to be for a big bounce? What's that catalyst going to be for a big drop? That jobs report is likely to push the market one way or the other.
I agree. And of course, it's all back to the rate cuts. Now it's sort of a given you're going to get a rate cut this September. The question then becomes how many rate cuts are we going to get this year? I mean, it almost really doesn't matter if you do a 50 basis point cut in September or not, although I'm sure the market would like it. But what really matters is what is going to be the pace of the cuts. And, because there's two ways to go. Powell can come out and say, look, we're going to cut 75 basis points, or the impression will be from now to the end of the year. And then we're going to pause and wait to see what impact that had. We want to make sure inflation is not returning. The other message could be we've been restrictive for a really long time. We're starting to see the negative impact on the economy. We have to relieve some of the pressure here. And that could start to indicate more like 100 or 125, maybe even 150 basis point cut for the rest of the year. So that's really what the focus is going to be. It's no longer are they going to cut? They're going to cut in September. It's how much are they going to cut for the rest of the year? And that's what the market will be looking for.
Right, and the market will be evaluating all the economic releases as well. If they start to fall apart and we start seeing job growth below 100K, the market's going to get a little bit worried about that, especially if that's accompanied by other economic data points. ISM services is going to be released tomorrow, 30 minutes after the open. It's a number that I watch closely because so much of our economic growth is tied to the services sector, 80%. So it came in around 51.6, which is just above the expansion level. If we see a pretty good drop in that number, then I think the market is not going to like that news tomorrow. So keep an eye on that. I like it because it's a survey. It is current. This is what purchasing managers are currently thinking right here and right now. Almost every other economic data point is backward looking. So this is kind of a glimpse of what's happening right here and now. Also, with regards to the Fed, always be careful what you wish for, because if the Fed does say we're going to cut this month and next month, I have seen many instances where the market panics and thinks, oh my God, what do they know that we don't know? Maybe things are getting a lot worse than we expected. So, yeah, just, we'll see.
We
From my
will.
viewpoint, I'm sorry, go ahead.
No, I was gonna say just a cautionary tale to people. It's very tempting, particularly if you're on Twitter or X or looking around YouTube, and look at what happened yesterday, right? So after the market closed, Twitter lit up. It just lit up with all of these overnight experts. And every single, almost all of them are calling for they were looking at the futures. They were saying that we're going to open, it's going to be just catastrophic drop today. Nvidia will be sub 100 by the end of the day today. And then they would give all the supporting. People were bringing back the carry trade, coming back into play. All these economic experts were coming out, and that's what they do. These are the same people. If you just click on their profile and go back 2 to 3 weeks, that were super bullish, and it didn't mention any of these things that they're now saying are obvious warning signs for the market. This is obvious. This is obvious. It's so obvious that a week ago nobody bothered to bring them up. But now they're just, plain as day. And that's why price action is so important, right? You have to look and see what is actually happening. And if you look to see, not one of these prognosticators out there mentions the moving average, the 50-day moving average on SPY or the 100-day on QQQ. Those are important lines. And you can see just looking at the chart why they're important lines. They hold unless there's a catalyst to tell them not to hold. Like tomorrow, the jobs report might be that catalyst. But That's why it's so important to follow price action and not get swept up in all these amateur prognosticators out there that are just telling you that things are so clear, but yet a week ago or 2 weeks ago, they obviously couldn't pick up on them at all. So, just a warning, you'll see a lot of that out there. You'll continue to see a lot of that out there. You see a professional version of it when you turn on CNBC, right? They do the same exact things. Just follow the price action. That's what the truth is.
Yes, and so the price action that I'm watching very carefully now, again, I did not expect this last leg higher. This told me that the bid was stronger than I had expected. I wanted to see resistance right here at AVWAP-Q. That would have preserved this downward sloping trend line, would have preserved the 50-day moving average. If, 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 if I had gotten that, that would tell me sell, 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 sell. Asset managers are unloading risk and they are happy to get out at this level. Okay. It didn't happen. I was hoping it would happen because that is a high probability setup for me right in here. And it would tell me that I can take shorts with confidence. When we get this release up close to the all-time high, good thing I didn't start taking a lot of short positions here because I would have been taking a lot of pain. But now we do see a long red engulfing, bearish engulfing candle, warning sign off of the all-time high just below it. Now we get a second one. Okay, at very least, I can surmise that there is resistance building at the all-time high. These are the signs. So we're going to wait. From my perspective, I need to see it close below the 50-day moving average, and I need to see it this week. If I don't see it, then I'm going to look at this long red candle as a one-off. Maybe a buyer's boycott where the market just started to gain some momentum on the downside and buyers just pulled their bids and watched the market come in. I'll dismiss it as a one-off, and then we'll see where we go because we'll still be in this range here. But
Same thing
we get
happened
that
in
drop.
August.
I'm sorry?
The same thing happened in August when we had that. It happened. We had a 2-day drop in August. Back if you go August 1st and August August 3rd, you had that substantial drop, and then bam, skyrocket.
Right. Yeah, and these big gap down days too. When you have these air pockets like this, that was the yen carry trade. And yes, there was higher volume during those 2 days, but realize that if this is really asset managers unloading stock, they're not going to panic selling here. These guys hang on to positions for a year or two and they scale out. So they couldn't get any size done here. They couldn't get any size done here. They're not going to panic, but certainly on a rebound back above the 50-day moving average and AVWAP-Q, if they were aggressive and serious about reducing risk, it would have kept the pressure on and you never would have gotten this last leg here. So those are just some insights on the technicals, and we want to see follow through on the bearish side to that long red candle very soon. The longer we wait, the less impact that long red candle has.
And that goes right into a question Dark Lord's asking: should I take profit when a short position is hitting some support, or wait a few candles to see if it goes even more down? And if it goes back up, then how many candles should I wait to exit? I mean, you're asking a general question for what should be a specific case by case, right? So depending on, are you in puts? When are they expiring? Are you short the stock? That matters. What type of support are you talking about? Is it an SMA? Is it a trend line? Is it just the previous day's low? That also matters. If you see something in general answer your question. And Dallin, I know you say look for RSI and volume, maybe momentum too. RSI, remember, stands for ridiculously stupid indicator. Do not use it. But if you see something, you're short something and you're in profit, and obviously it's going towards support, wait to see if it bounces off of that support. Of course, if it breaks through, you want to hold that short. But if you see it bouncing off support, doesn't mean it won't retry it again, but take profit. You can always go back in, right? It breaks that support, go back in. Now you got another nice short. It just broke support down. But you should be in profit if you see it bouncing off support. Why? Because you shouldn't take a short that is that close to support. So if it has already reached support and you short something, you should be in profit because you should have taken it when it was far away from support. And at that point, take profit, and then you can go back in if that support breaks, and now you have another nice break of support there.
Yes, and what is the context? What is your trade duration? Are you trading off of a D1 chart? Are you trading off of a 5-minute chart? Are you evaluating support levels on those time frames? And if you are in a market like this, you are short and you see these long red candles that are starting to stack up in here, you're seeing them with greater frequency. Of course, in here, you're going to let that trade run because you've just taken out the market has taken out a significant support level. So if you're short a stock and the stock happens to be up against a short-term support level with the market absolutely getting obliterated, you're going to hang on to the position more. You're going to let it run. If you are short up in here, you're day trading as we've been suggesting, and you're going to be focusing on 5-minute charts, and the market is compressing. It's not giving you a tailwind. You're going to be more inclined to take profits quicker when you have this type of market action.
The issue with RSI is it doesn't tell you by itself when it says something is oversold or something is overbought. The natural inclination, just by the vernacular, overbought, for example, right? That leads you to think it's going to drop. So one thing it's telling you to do is to predict a trend before it happens. So it's a counter trend, right? Because if something is going up, it is over and it's overbought, and you see it's overbought, RSI is telling you now this is time to short. So now you automatically you're going against the trend. The second thing is, if you look at RSI on side, let's look at NVIDIA through the years, right? Through the last 2-3 years, stocks can be overbought or oversold for an extended period of time. And by extended, I don't mean a day or two. Stocks can be overbought or oversold for, months at times. So it making you get into the mindset of going counter trend before seeing what other indicators and better, like the trade signals, which Pete has put on Option Stalker, and we'll talk about, are much better indicators for you on when it is time to short or not short. And these aren't counter trend indicators. Anything that tries to get you to go counter trend, think of it as being counter institution, because the trends are the institution. And when you go counter trend, what you're trying to do is get ahead of the institution. You're trying to say, this is where institutions are going to stop buying, RSI tells me, or whatever. And I'm going to get ahead of that, and I'm going to start shorting here, buying puts here, because I know that the trend is going to stop. You have no idea what the institutions are doing, and all you're doing at that moment is betting against them. And betting against financial institutions, generally not a good bet.
Okay, so yes, today we are trapped in a range here. There's not a lot going on. We've got major news pending. Just a tidbit of information for you. When you get a long red candle like we had yesterday, big range, way above the normal ATR. When you get these huge days, typically you're going to have a pause the next day. And that's because you've got buyers and sellers. Buyers are nibbling in here. Sellers are still somewhat aggressive, looking to perhaps take off more risk. But you get this back and forth price action that just kind of chops around. So that's just something as a day trader that you should plan for, because it tells you that after a big day like that, today you should expect probably going to be a low probability trading environment, especially when you have a pending news event coming up.
So I want to talk about one of my picks for the day, which I really like. And I mentioned this before. I'm actually long this in the challenge account. PayPal. I really like PayPal here. And I'll tell you why. One, it's obviously up today in a market that's not. But look at yesterday, right? PayPal's up yesterday, one of the few stocks that was up a few pennies um, on a day where the market's down $12, where SPY is down $12. That in itself is a remarkable achievement. Then you look at the at the at the daily chart here, and what you're seeing here is a really nice bull flag come in, starting with the low on August 5th. And you have multiple levels of support. You have the EMA, it's above all of its SMAs. It has broken through its downward trend lines. Obviously, this is a case here where you have to look at this compression. And what you would do is you'd put you don't want it to go below $70.50, which is right above the 15 EMA. And that's your upward sloping trend line off of August 20th. And you have your next level of resistance is all the way up at around 75, which is your another upward sloping trend line from August 20th, the same candle, just throw it off the top. But I feel that given the relative strength of yesterday, the relative strength that it's showing today, I like PayPal a lot here. I'd recommend in the money calls that expire next week. That would be my best, my pick for the moment is PayPal.
Nice. Got a question. Pete, do you use LRSI? I do use LRSI. I don't have it on my charts as much as I did before, but I definitely look at it. I use it when I'm setting custom alerts. So many variables that it's difficult to always highlight all of them in my videos. So the one thing that you always see is real relative strength. I like that. And on a daily chart, because I like to trade options, you'll see this historical implied volatility line. And that allows me to very quickly know if I'm going to be favoring option buying strategies or if I'm going to be favoring some type of selling strategy, a vertical call spread or put spread.
Someone is pointing out the ASTS. That looks like a good short-term long. I agree with you. Dave has been all over that stock in the chat room today. He actually made two trades on it, and I think that's one of my favorites. I like it. But it's more of a day trade for me, so keep that in mind. But I do like ASTS. It's getting a little extended at the moment, but it's a good stuff.
Very nice buy signal in there, by the way. You can see buy signal here. Stock makes a new high of the day. Great relative strength, heavy volume. Checkbox, 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 checkbox. D1 chart. Very nice checkbox above AVWAP E. It's how you do it, and Dave is the master at marking check boxes. If you look at his trades, they're impeccable. I mean, he marks 15 check boxes across everything. That's what makes them very, very high probability trades. I'm going to do a quick search here while you kind of look at some of the comments, and I am going to use this to find some bullish and bearish picks. And so I'm going to look at the trade signal being bearish on M5 basis. I'm going to look at stock below the prior day's low, stock making a new low of the day, good option liquidity. Let's see if that yields anything. It does yield AAP, and we'll take a look at that one. I like that short. Okay, look at these stacked red candles. This thing is just continuing to drift lower on decent volume in here. You can see the volume has stayed elevated here, and go into a 5-minute chart. This is going to be my short pick of the day. I'm pretty confident in it just looking at it right now. Letter U is not looking too bad either here. We've got a rejection off of this trend line here, well below the 100-day moving average. It is breaking below the 50-day moving average. It's been relatively weak recently. So I like all of those things. Let me check real quick and see. Pretty choppy there, though. You can see that the stock has been on a 30-minute basis Though I tend to avoid stocks that do this, okay? Those are some massive moves from $16 to $18 back to $16. That's a big move, a bit too choppy for me. AAP doesn't have nearly that level of volatility. In fact, it's just drifting lower because there is an institution that has a position or two that hate this stock and they want to get out. That's why it can't come up for air. So I like AAP as a short.
It has broken through just about every potential line. I mean, this thing was at $240 way back in the day, 244.55 way back in January 5th. I mean, this thing has just utterly and completely collapsed under its own weight. And then obviously you get a bad earning report after, normally a sign also this is continuing to be a good short is you have this, earnings report come in. I believe it was on 8/21 or something like that. And the stock had already been punished, right? I mean, this thing had now gone from 95 to 60 in the last 2 months before that previous earnings report. Usually when you see that, you have that indicates that the bar has been set really low because a stock's been punished and now earnings are coming out. So the standard, the expectation that it needs to get over is much lower than it was because it's already been punished, particularly like in this case, it's been punished a lot. And then when you see the stock go down further after it's been crushed by almost 100, 90% here, or sorry, 75% of the stock has been crushed in like a year or 9 months. For it to continue to drop from there tells you that there is something fundamentally wrong with the business model and with the business, and that investors are seeing it because even at the price level it was at that earnings, it was still not low enough to get to go over that hump. So I think it's a great short. This stock probably is just going to keep drifting down to nothingness.
Wait, Harry, RSI is telling me I should buy it here.
Oh, right. It's oversold. Yeah. It's oversold because it's crap. That's why it's oversold. So why? So basically, RSI saying buy the crap. Yeah, no.
Yeah, and so yes, RSI would have been giving you buy signal, buy signal, buy signal, and the whole time it's continuing to drift lower. So that's why we don't use it. It's confused with relative strength, which we do trade. And that's another reason to hate it because the two are constantly confused and they are both very different indicators, one measuring the stock against itself, the other one measuring the stock against the S&P 500.
Yeah, I get that all the time. Oh yeah, relative strength, same thing. It's apples and asphalt. It's completely different things. I never say apples and oranges because they actually are like they're both fucking fruit. I don't get the saying. I got a lot of questions as to why am I long the video here, and I pointed out both in the chat room and pointed out on Twitter. It's not a technical trade. It's a trade because of the information I got from JPM, which was very clear about one, how enamored they were with their earnings on NVIDIA. Two, how all of their big heavy hitter clients are lined up to buy the dip. And that tells me that, despite the whole Justice Department announcement, this was an effort to get it down and then come in and swoop up and buy the dip on the stock. And I think that's exactly what's happening. So it was not a technical trade, which I pointed out. It was a trade based on institutional information, which I'm sharing. Not always accurate. A lot of times institutions can change their mind. They could come out later on this afternoon and tell their clients, hey, this Justice Department probe is a lot more serious than we thought. Time to sell. But for the moment, what I'm hearing and what they are telling me is NVIDIA is to their clients, and what they're telling and communicating their clients, because they communicated it to me, was buy the dip, which means they're telling hundreds of billions of dollars of liquidity out there to buy up this stock. And that is why I went long, not because of a technical reason, which I pointed out. So, and I said I advise everyone not to follow that trade, obviously.
Question, is LRSI better than RSI? And it is,
Yes.
because it has a smoothing component to it. And so you can see LRSI here. This is not giving you a buy signal. It is telling you stay short, because it is down at the 0 level while it continues to fall. And you would not cover that short until you get LRSI poking back above 20. And even then, you shouldn't be going long it, because the stock is in a downtrend. So if you looked at, oh, look, LRSI is above 20, I should buy here. Wrong. I should buy here. Wrong. I should buy here. Wrong. You have to have the trend on your side, okay? So what this tells you is that every time you get a move above 80, and LRSI falls below 80 because the stock is in a downtrend, that is where you establish a short. That's where you establish a short. That's where you establish a short. So that's how you trade LRSI. They are different. Got some questions
Wait,
on.
Pete, this is a beautiful illustration of the trade signals. Bring up Goldman Sachs for today on the 5-minute chart with the trade signal.
Okay.
See where that buy signal is right there? Now, this here, the stock is in compression. You even have a couple of red bars, but yet you get this beautiful buy signal. Look what happens right after that buy signal. Boom. You're up like $4 on that stock. That is a perfect day trade for you.
What you'll find on a lot of the signals is that you're going to get, and I'll just put a few of them up, you're going to get some really nice movement after that signal. So that's when you have cushion in the trade. That's when you can put a stop at your entry price. You can limit your downside risk and still have very nice upside to the trade. So yeah, come in and try them. Of course, I'm going to say that the trade signals are great. I think they're great. I'm using them a lot. So we use them for alerts. So you can go in and set alerts. Tell me when this stock has a buy signal on X time frame. Tell me when it has an exit alert on X time frame, so that if I'm long, it tells me when I might want to take profits on that trade. Uh, so you can use them in alerts. You can use them in all of our tables here. You can see these are all the trade signals across multiple time frames. If you have them all lining up across every time frame, of course, ooh, the signal is better. CELH. So this is one I just happened to click on, Red Royal Flush. Look at this little pig. This thing is selling off beautifully. I love the breakdown below these trend lines here. Okay, these are some pretty long-term trend lines. That is a bearish flag formation right there. Let's zoom in. This is a nice little short here, boy. And look at this volume that just came in. That could be a nice short of the day right there. And look at that sell signal. Ooh, that was timely.
Mm-hmm. Very nice.
So yes, yes, this actually looks like a really decent pick, and I love this breakdown. I love the heavy volume, and I love the fact that the stock can't bounce in here. Whatever that news was, it's negative, and this stock looks like it's going to continue to go down.
Yeah, the news is their drinks suck.
That would be a good reason to sell the stock.
They're fucking terrible. And here's the most often asked question ever. We get, sorry, I'm reading two questions at once. How much can you expect to make per year if you manage to get good at this? I mean, come on. Anywhere from anywhere to anywhere. How much are you starting with? How much are you using? When you say get good at this, you're talking about 2 years minimum where you're not making money. You're training, you're paper trading. You're trading one share. When you finally reach all of your milestones of paper trading, you move in some money. Now you're trading just one share. You're not doing it to make money. You're doing it because you're still in training. And then you finally got a training. How much are you starting with? 10K, 25K, 50K? It takes time to build it up. You start with 10K in your account. It's going to take, if you do it right, 6 months to double that, maybe a year to double it if you're just starting out. Now you have 20K. Now it's still going to take time, and another 2 to 3 years. So it all depends. You all see how much money I make and don't make on my trades. They're all public. I didn't start out with that large amount. In fact, if you read the wiki, I got wiped out. I lost like 200K twice, like off the bat, just bam, gone. And then I stopped and studied and studied and studied, and then finally went back in. So it took a long time and some serious heavy losses. I wrote the wiki partly to help you all avoid taking those heavy losses in the beginning and doing it another way, through paper trading, through trading one share and getting it to its almost muscle memory. But, it is financial independence. It is the key to not having to get and rely on a paycheck. But yeah, you have to get good at it. You have to put the time in. And then it's amount of how much you're going to start with and how patient you are to grow that account. What I do I take profit out every month. And then every 6 months, I increase my base amount by 15%. It's around a 32% increase a year in the base amount. But that's what I am doing. Other people can have it differently, but you need to build a business plan and stick to the business plan.
I had a question on Meta. I think I panicked out of Meta bull put spread. Had expiring Friday, sold the 502.50s and bought the 495. So 502 puts you down in here. Bullish put spread. Stock hasn't done much. You got AVWAP-E running in here. Meta, relative to the other tech stocks, has actually held up pretty well. So yesterday, the stock didn't sell off very hard right here relative to all the other tech stocks. If you had watched relative strength during the course of the day, you would have seen that you've got green line above zero. The stock is holding up well relative to all other tech stocks. Stock was at 510. Yeah, I think you did kind of panic out of that one a little bit. So try and have a little bit better staying power. Your short strike price is at 502.50 and your expiration was this Friday. So you've got a little bit of time. Wait to see what happens. Yesterday alone, the stock held up beautifully. You would have needed to have another really big down day in the market, and then you could have evaluated to get into trouble. And you could have evaluated to see if the stock had some strength.
We also broke the golden rule of a BPS, which is your support was the 50 SMA. That's what you were relying on. That thing's at 505. You're relying on that support to hold, because if it holds, then your short strike and expires worthless and you're good, right? You didn't, it did hold. It never broke the 50 SMA. So why were you getting out what's the point of doing a bullish put spread with those levels of support underneath if you're not willing to see if those levels of support actually hold? And in this case, they held beautifully. So your setup was perfect. Your trade was perfect. The only thing that wasn't perfect was your management of it.
Let's see. I've got a question on CVS. And let's take a look at that. Might be a good short if it can break out of this M5 compression around the 50-day MA. Well, you can see it tried to get up to the 100-day today, but all these moving averages are compressing and consolidating and converging right in this level here. So for me personally, I'm not trading this thing. I'm not going to touch it until I get some type of really nice breakout. So GTC, click on the 100-day. Now I know if the stock goes above that level. As far as any potential short, yes, if it gets below this point horizontal, it'll breach this upward sloping trend line. So GTC, click on that. If it breaks below that, I'd like to know. Doesn't mean I'm going to trade it, but okay, if it can get through one of these two price levels, it'll hit my radar. I'll take a look at it, see what it's doing.
Someone asked, there's talk of a VWAP, RSI. There's no talk of RSI. Let me make that clear. The talk of RSI is don't fucking use it. That's the only talk of RSI. Real relative strength, relative weakness, EMAs and SMAs here now in the Discord, from what I read so far of the wiki. What are other indicators not so talked about? We talk about LRSI to give further confirmation. Hey, look, don't overthink it. The cleaner the chart, the better. I keep the 50, 100, and 200 SMA on my daily chart. I keep the EMA 15 on my daily chart. I will draw trend lines to see support and resistance. Your 5-minute chart, you have your relative strength, you have the trade signals. You don't want to over indicator your charts. They become a mess because they'll start to put on Fibonacci lines as people putting on the cloud. Don't. Just keep it simple, keep it clean, know your level. All of TA, all of it comes down to properly identified levels of support and resistance, which is based on price and based on volume. And everything else is derived from that. Get your levels of support and resistance correct, watch price action, minimize the indicators you use. You see the indicators Pete and I are using every day. It is all we need to use. So don't overcomplicate your charts. You don't want them to look like a friggin' mess of a ticket to ride board or something. It should look clean. Look at Pete's chart here. I mean, that is a really clean chart he has up.
Question on Apple. Can I look at Apple? Apple to me looks like a decent little short on this compression breakdown here. Sold off pretty well yesterday. Today, it broke below the 50-day moving average. In fact, I was considering this as my short of the day, but Apple doesn't move much. Right now, it's just not doing a whole lot to get me excited. So lower high, double top, sure. We know the QQQ is within striking distance of the 100-day. Apple's got a lot longer to go before it gets to the 100-day. Just tells me it's got a little bit more relative strength than some of the other tech stocks. It can take out the low from today. Let's take a look at the 5-minute chart. I mean, I like the short. I like the price action this morning. Market was up, 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 up this morning. Apple was down. So decent volume on this decline. I think Apple is going to be a better short than a long here. And when you have these thick stocks, what does thick mean? Thick means the big seven, okay? Mega cap stocks that have tremendous amount of liquidity. They're not usually going to move very much. You're going to move down, you're going to get bounce. So that tells you that you don't short here, you wait for the bounce. If you're going to short it, and then you evaluate the height of the bounce and the duration of the bounce, and then you might have another short that sets up well for you. Yesterday, you saw this type of steady downward price action because that's what the market did. When they sold the S&P futures, they had to sell Apple stock because it's one of the major components. It is the major component.
All right. I have a bunch of questions here. What are your thoughts on TA for leverage ETFs? I do not like leverage ETFs. They naturally decay. Logically, the TA should be on the underlying instead of on the ETF. Yeah, it's correct. I mean, if you were to use it, you do your technical analysis on the underlying rather than on the leverage ETF itself. What do you think of an earnings reaction trade such as DLTR? Obviously, it got hammered again. I wouldn't touch it. This is the same type of thing as what Pete was saying, except now you have the volatility of earnings with AAP. Here you have something where the bar was incredibly low. The stock is way off of its highs, and it still goes down. That indicates some serious problem. And right now, there is no support underneath this thing. None. In fact, it's going to its almost COVID lows back from March 2020. You might think, oh, it's a buying op. Wait until this thing bases. It's going to be in the penalty box for a while. I wouldn't touch it. I wouldn't short it or go long.
So I would only short it if I had about 5 days worth of data after earnings, and I want to see the majority of this long red candle preserved. So if the halfway point is preserved after 5 days and the stock just can't recapture this long red candle, I'll feel pretty good about shorting it in here. If it takes out this long red candle and erases it, rally, 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 and starts going into this gap. I don't want to see that. But yes, this downward price action tells me that this is probably going to line up to be a good short eventually. I just have to be careful right here to make sure that this is not an overreaction and there aren't any buyers willing to scoop the stock in here. So yeah, it's going to take 5 to 10 days for this to settle out, and then there might be another good shorting opportunity in there. Day trading wise, you can day trade anything. If you're a pretty decent trader and you can, from the short side, you would definitely want to day trade it. Long side, you had to be a little bit more seasoned because, and I say that because a seasoned pro is going to know a bounce from a legitimate move, and they're going to know that on a bounce, they've got to set passive price targets, and they're going to be very aware of the price patterns, compressed tiny bodied candles at the high end of the range, bearish engulfing candles. They're going to know when they need to exit any kind of bounce. But on the short side, you have a greater margin for error because the stock is so damn weak. So for most of you, yes, if you get any kind of bounce and you want to trade relative weakness on a day trading basis in this one, I think you're going to have some opportunities.
What factors do you take into consideration when choosing between in the money longs, call, put debit spreads for directional plays, other than the obvious things like wide spreads, liquidity, size of underlying? We kind of almost answered a lot of the question there. And what delta are you usually looking for in your in the money longs? I like delta 0.7 or higher on in the money longs. The whole point of options is leverage, right? You want to get as close to 1-to-1 as possible. Yes, it's more expensive, but the less you're writing the contract, if you're buying options, the less you're paying in premium, the more leverage you're going to have, and the less work the stock has to do for you to return a profit. If it's a choice between taking 5 at the money calls for $1 or 1.75 delta call for $5, take the one. It just, I get the idea of like, oh, I'll get a lot of these calls that at the money or out of the money, but it's really not doing yourself any favors. And then on the debit spreads, it really does come down to one, if I think the stock might have a limited move within a range, right? So, if you get a straight call or put, you're going to get all of the upside or all of the downside. Whereas a debit spread, if you did like, a 330 to 335 call debit spread, anything above 335, you're not going to get the benefit of. You just get the $5 in there minus the cost of the debit. So for me, it's, if it's an expensive stock, if there's a high IV, a lot of premium, I don't want to buy the in the money calls because I still feel that there's a lot of volatility there and it's a huge risk for the price of those calls. I'll do a call debit spread or a put debit spread that mitigates some of my risk because I can finance the long call, the long put with the short call and the short put. And I can also take out, like you said, the wide spreads, bid-ask spreads where you can mitigate that as well. So that's sort of my thinking there on those. But, my absolute preference is buying the stock. And as you see on the larger account, I'll buy the stock. Obviously, on the challenge account, the smaller accounts, much more difficult just to buy than to buy the stock. But if you don't have to worry about needing leverage, you buy the stock. That's your straight best play. Day trading, swing trading, investing is just buying the stock. But beyond that, obviously, you use options for the leverage of it.
Great answer. I 100% agree with all of the above. And I do like trading stock as well, especially when I'm day trading. Let's see. I did have, you know what? Let's take a little bit of a break. I ran a search. I got to find a long today. Okay. So I'm looking for our trade signal on a H1 basis. That's a 1 hour basis. I'd like the price of the stock to be better than $10. Show me a stock since I'm not using option liquidity rating. Show me a stock that has at least 1 million shares traded today, something that's got some volume. So 20% above the 20-day average volume today, and a stock that's above the prior day high. We got the market waffling around right now. So think about this. This is kind of an important concept because when you use variables, you need to think about this intuitively. A stock that is above the prior day's high. What would it take for the S&P 500 to be above the prior day's high? After a drop like that, it would take a massive 120-point move. Well, if a stock is above its prior day's high, it probably didn't sell off very much yesterday. That in and of itself would be a sign of relative strength, right? Okay, show me a stock that's above the prior day's high. These are going to be some kick-ass, strong stocks. Click scan. Let's look through the list. Let's find a long. Took me minutes to bring this up. So now I'm just going to flip through some charts and you can see, I'm just going to show you all these stocks should be strong. 200-day moving average, no interest, okay? Got a lid on that. Would I set an alert above that? Sure. BTI, I mean, look at these stock charts, okay? Do these look like some pretty healthy stocks? CZR, nothing there. DE breaking out through a horizontal resistance level, very choppy, so I don't like that. And I'm just going down the list here, okay? Nice compression breakout. I'm not going to highlight all these, but I'm just showing you how easy it is to find opportunities. Look at Mondelez, beautiful breakout through horizontal resistance, not a big mover, typically very choppy, no need to chase, wait for a pullback, put a bid in there. MDT, I like MDT. There's your flagpole, breakout through horizontal resistance. There's your bullish flag formation. Look at how well the stock held up yesterday, held up above AVWAP-E, really nice earnings reaction. MDT is your long pick of the day. Just put this back up there so you can take a look at some of these others. I did take a look earlier today at Well. It's not one that I thought it'd be an oil stock, but it's not. It's actually a healthcare company, and that is a really nice pattern. Very, very strong upward move. So that's pretty nice, but MDT, that is your long pick of the day.
Nice. Couple of questions here. PCG D1 looks good for long. What are my thoughts on this? Yeah, it looks fine. This is just, look, this is my buy. I hate boring stocks. This is a boring stock. And there's nothing boring about making money. I get it. It's just, I'm sorry, it's just a boring fucking stock. This thing just moves really slowly. But technically, yeah, it looks fine. It's not too overextended. It's broken out of its horizontal lines. It's, it's above all SMAs. You don't have earnings for a while. It's a fine stock to own. Maybe grab 20, 30 cents on it. It has a really shitty average ATR, weekly ATR. This thing's going to move like 40 cents over the period of a week, plus or minus. So, if you're really patient, sure, but you have the chart right. I just don't like the stock. So that's just my own personal bias on it. And then IBM is a great pick. I mean, this also could be another long pick here of the week, Pete. I mean, look at this. You have some concern here with an upward sloping trend line that it is right at the top of its corridor. This is a pretty narrow corridor. You draw from the bottom of 8.8 and you draw from the top of 8.8, and you get this kind of very, very narrow corridor for this stock. And it's bumping against the top of it. So if you want to be really conservative, you would wait and set an alert for the top of that corridor. However, this thing's on such an orderly upward move, an orderly upward trend. I think you can, on this case, correctly anticipate a break here as long as the market cooperates. And all of these, what I'm saying in these picks, they're all contingent on the market. Obviously, if tomorrow we say, oh, you should go long this, and tomorrow the jobs report crashes the market down to 540 on SPY, get the fuck out. right? I mean, it doesn't, oh, well, they said go long. Yeah, we'll go long as the market supports that idea. So, but I do like IBM. I think it's a good pick. So thank you, Luca. If I remember correctly, you've had a couple of good picks in the past. So another nice one.
Yeah, and if you've got a really nice stock that you're currently eyeing up, let's say ABT was one that I highlighted, and you like it on the long side, and you get a big market decline, you're going to be looking for opportunities like on an M5 basis where you can come in and buy off of a buy signal, and then you set those alerts. It's what you would do. So in, out. Right now, the market's trapped in a horizontal range. So you're in and you're out. If you have a really, really weak stock like coin, and it's on your radar and you get a nice market bounce today, you're going to be waiting for that thing to go on a sell signal. And if it coincides with some market weakness, you're going to have a really nice opportunity to day trade a short.
You got a question for you, Pete. Any plans to make Option Stalker Mac friendly? If not, is the group chat run on a Discord or is it internal within the software? I mean, the group chat, I believe, is accessible online in the web. I run that chat room, but it is, you use your login for Option Stalker to get in. But it's run on the good Option Stalker website, the chat room, and so you can join. The Real Day Trading Discord is open. I don't run that. I don't own that Discord. That's the that's the forum on Reddit that owns it and runs it. I just kind of post my trades in there. But any answer on the Mac thing there, Pete?
So the web version of Option Stalker is web-based, as Harry pointed out. You can run it on any device that you'd like, even a mobile phone. As far as Option Stalker itself, I do not have any plans to develop and support on Mac. That's just another operating system I've got to deal with in addition to all of the APIs. So no, and it runs very well on Parallels. So for those Mac users who want to use Option Stalker, they can get Parallels. And that's one less thing that I have to worry about. Right now, we are going to be writing into the Schwab API, by the way. That's been released, and that's at the top of our future lists of things to do. It's what we're working on. And I might even consider running it, writing into Tasty Trade API. We'll see. That'd probably be a few months down the line if we decide to. But we've got so many other dang projects that we're trying to work on. A new operating system is definitely not one of them.
How much does unusual options volume come into play when taking a trade? Example would be if a stock checks off many boxes to go long, but there's unusual options activity on that stock for puts. It depends. I ignore unusual option activity if they're like out of the money options that are like 25 cents. What I am looking for if I see unusual options activity is I am looking for institutional level unusual options activity. I'm talking about show me a 5, 10, $20 million option purchase on something. The reason I took that VIX spread, which did very well on, is because someone had put together nearly a $30 million, exactly $30 million VIX call spread. So I just saw that and saw VIX at its low. It matched up and took the spread because it also, checked off the box of being a good hedge. So there's, a combination. Did I need a hedge at the time? Yes. Did it look institutional? Yes. Was it set up on the chart that way? VIX, you are looking to see when it puts in a low. Yes. So that's why I took that trade. But again, it really has to show me institutional level. And even then, there needs to be a reason. Like when I took a while ago, I took Apple calls because of the unusual option activity. One, it was clearly institutional. It was like $100 million worth of calls. You don't get that from a retail trader. And two, Apple technically was not set up bad at that time. It was, it was a justifiable long, even without the unusual option activity. So, was it a perfect long? No, but the unusual option activity allowed me to go, okay, this is a justifiable long, but with this institutional long on it, I'm taking it. Does it mean they have inside information? Does someone know something? I doubt it. Those things are really difficult to, a lot less prevalent than you think. But, does it mean that there was some analyst somewhere in an institution who put together all the pieces that are publicly available and the research they did together in a way that's different from other institutions and said, hey, I think I've figured something out here. Apple's going to be doing this. Yeah, that's much more likely that their research department kind of scooped the other institutions in that area.
I personally don't use unusual options activity at all. There are so many services out there, each of them flagging unusual options activity. So if everybody has the same information, is there an edge there anymore? Probably not. The market makers who are on the other side of it, this is all automated. As soon as they see the size going through, what do? They spike the IVs up and they widen the bid ask spread because they will not be picked off. And so you have the lemmings following in on the trade afterwards. I don't see an edge there. It's going to be reflected in the stock price because the market makers are going to be laying off size on the underlying stock. I'm going to pick it up based on my analysis of the underlying stock if there's something of interest for me there. And then you get into the whole gee, was this really a one-sided trade or was it perhaps a hedge? Long and short of it is I have my reasons. I don't use it. I don't even look at it.
John writes, I find myself sometimes drawing too many horizontal support and resistance lines. I can hear you on that. Any tips? Yeah, I actually have a video on drawing those lines on my YouTube channel. Just go, you'll see the video on drawing trend lines. I include a section there on drawing horizontal lines, and that should help you. And what signals do you see currently on PDD? So let me go here, type in PDD, take a look here. And if you'll see, PDD on Options Dogger has a huge sell signal, both on the daily chart and on the 5-minute chart. Sell signal still on. Looking at the chart also looks like a clear bearish sell. Everything about that screams short, and the sell signals picked it up. If you follow those signals, you would have shorted that stock today at 95. It's now at 92, or on the daily chart, you would have shorted it at 96. So if you've just followed the signals, you would have shorted that at 95 or 96. And I think it's still a good short.
You get a breakdown below the prior day's low and a sell signal and a decent volume that sets up well. I particularly like when there's already a sell signal pending the prior day, meaning that it's on a sell signal the previous day and the stock takes out the low of the day and the volume is decent. That is a really good trade setup. So I look for it, I search for it, I go through my searches the previous day, I set alerts at the low of the day for bearish trades, I set alerts at the high of the day for bullish trades. And the one thing that we get is we get a lot of alerts that are triggered in the first 5 minutes of trading. But when you go in and take a look at your alert history, you can go through any one of these, click on it, and then you'll be able to see what the chart looks like. And there was actually, oh, that was an explosion alert. But in any event, you can go through, since you're going to get many on the open, and you can double check them just by going through this and clicking when you have time. So instead of trying to look at all of them in the first 10 minutes of trading, take a deep breath, let the price action settle down, click, 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 just go right through the list, and you're going to find some really nice trade setups.
So my 2 trades for the week are going to be PayPal long. And then I would, because of the volatility events coming up and because of where we are in the daily chart with the SMAs, I would suggest a SPY strangle. I would do a long strangle. So I would buy the expiring this Friday I would buy the 554 calls and the 548 puts. That's about a total of 495. You know, I'm going to put that in right now, and I'll get, let's see, about 5 of those. So there we go, and done. So those are my 2 trades of the week.
Yeah, and the notion there also is that the 50-day moving average on SPY is at 549. If you take out the 50-day, you should have an easy shot down to 548 and even further than that. So that's a major support level. And once you start getting through those support levels with gusto, then you tend to get a trend day. So, yep, I can see the logic behind that. I had AAP as the short,
Yep.
and I still like that, but dang, I really like that CELH short too. And this, so I might shift gears and go CELH for my short. Yeah, I'm gonna go CELH for the short. Plus, Harry hates the drink, so that's enough. That's good enough for me. And on my long side, I had MDT.
Both good picks. Everyone
Yep,
has their
so
picks.
all right, everyone. Thank you so much for attending. Harry, thanks so much. We will see you in the chat room.
Sounds good. Thanks, Pete.
All right.
Bye, everyone.